Good morning. I wanted to talk about income tax preparations. I'm focusing on two things this morning. One is the zero tax filers and the form of the type of business in which you want to create when you go into business. Um, the first one, the zero tax filer, I'm talking about those individuals who are limited on their income, and generally they end up not having to pay any taxes. Although taxes may have been taken out of some of these individuals' um, uh, paycheck, uh, most often they receive a refund of the total amount. Then there's your other group of individuals who may not get the total amount that's taken out of their checks, but they can take advantage of credits and different deductions to fully get all of their returns back. And then there are other individuals who actually exceed the amount that they receive back, that goes beyond what is taken out, because Uncle Sam has made a determination based on how much you make that you are eligible for certain types of credits. So they reward you. They also reward you on certain things like the number of children that you have, but you still work. And they reward you um, on going back to school, or maybe even teaching school and supplying certain type of supply. So the list goes on and on for those individuals, and generally it's directed at your low income, young female headed households. You also have those students who still live at home and they're working, but they also can file a tax return and receive money back. Yet their parent can still claim them as an exemption. So that's sort of a reward to encourage young people to work when they get a certain age. But all of that is limited. But a lot of individuals, especially when they're young, are not aware of all these different types of credits and deductions that are out there, so that they can become zero tax filers. They think that just because Uncle Sam took money out their wages, that they may have to just let Uncle Sam keep that money. So it's best to investigate and get more information on whether or not you truly owe the amount of money that they took out. So that's my zero tax filers. The second part is I wanted to talk about when you form a business, you want to try to figure out what structure um, should I form my business? What type of business should I be? When you're starting out, a lot of times you are the only owner, the sole owner of your business, the sole owner of your idea. So what was available at the very beginning was your sole proprietor. So that meant that you were the only owner, and if there were any debts that was involved in this business, then they knew exactly who they were going to come after. And so you took a huge risk when you went into business, and that discouraged a lot of people from going into business because they didn't want to lose their homes, their cars, and put their families at risk. Well, I think it was back in the late 80s or early 90s, they came out with something that was called limited liability. And so a lot of, especially attorneys, um, discovered this limited liability corporation, which is called LLC. And under LLC, what they determined was is that as an LLC, you your personal um, funds would not be liable, could not be gone after by the courts for your business liability. So if your business went belly up, the only money that they could go after was what was in the business. So your personal funds could not be messed with. So that was very attractive um, for people who were starting out on business on their own. And for tax purposes, it didn't really require a whole bunch of paperwork. All you had to do was do a supplement and add the income or losses onto your tax form. So it was very attractive for individuals. But another thing that occurred is that there were individuals who maybe had a friend or a family member that who wanted to go into business with them, and it was called a partnership. Because if a profit or a loss is shared with another individual beyond yourself, then it is considered a partnership, whether or not it's put down in writing. So, um, so individuals wanted to be protected because if you were in that type of partnership, unbeknownst to you, that if something should happen for that business who you put all that responsibility of thinking the one person was carrying, that they could actually come after both of you. So they could come after your home and the partner's home. So again, the business structure came about that they created something that was called a limited liability partnership. You had the person who was your the general partner who was responsibility for the majority of the business, and then you had individuals who were partners that were basically investors and said, hey, I believe in your business, I want to support your business. And so they said, I'll go in business with you, but what it is a partnership agreement that I'm only going to be responsible for this and this only. So those are good businesses in which to go in because for tax purposes, again, because everything always goes back to Uncle Sam, in partnerships, there is no tax liability for the business. And what I mean by that is that, say for example, you made $1,000 and it was only you and another person in the business. You as the general partner received maybe 750, and then the other partner only received 250. Then the tax liability is a pass through. That 250 is put on the personal income tax of the other partner, and the 750 is put on your personal income tax. So that way, both partners shared on the tax liability, and you pay the difference to Uncle Sam. So limited liability was the best one for those individuals who are solely a one owner business because your personal wealth is protected over your business liability. And your limited liability partnership is good for those individuals who invest in your business but expect some type of return. So that's what I wanted to share with you today when it comes to things that you're thinking about when you're getting ready to file your taxes. Always be on the lookout for the credits and the deductions. And don't believe just because you're looking at a number that's looking back at you on your W-2 form that that means that amount must go directly to Uncle Sam. There may be a ways in which Uncle Sam actually owe you some money. This is Dowdell Research, 301-978-1242. Thank you for watching.